pre-feasibility study that'll allow them to get it financed. So, and if they get that up and running, that'll fund the advancement of the rest of the project. And it's very high grade open pit gold. I mean, thought about that psychological aspect of it. I just really enjoy doing the research. I enjoy writing it. I enjoy finding new ideas. And I like to look for, like you said, you asked other people about Cabral and they hadn't heard of it. I mean, Cabral puts all its money into the ground. I don't even know if they promote it all. Maybe they show up at conferences, but, and the CEO, he buys shares in every financing they do.
In a recent talk show called Live from the Vault, hosted by Shane Morin, expert Dave Kranzler discussed gold and silver markets. Silver prices were being held back while gold prices were rising. Retail investors were selling off their silver at a discount because they were frustrated with its stagnant price. However, on the wholesale side, there was strong demand, especially from India, where refiners were struggling to find enough silver to meet orders. Dave speculates that some of the selling from retail investors might be driven by the need for quick cash rather than a lack of belief in silver's long-term potential. He also suggests that big banks might be trying to prevent a repeat of the silver price spike seen in 2010-2011, possibly to avoid a short squeeze in the physical market.
In fact, I just kind of was looking at a chart of silver, a daily chart, and I follow the front month future contracts because that's what I trade. So May silver is the front month right now, and it's pushing 27. So, but if you just look at more of a spot type of contract, it looks like if silver can break above 26.50, it's look out above. And I think that's when you'll start to see silver short. They're either going to double down their bets, which they could do, right? Because they're doing it with paper. All they got to do is print more contracts, or they're going to scramble to cover. But here's what's interesting, and I actually write about it in the opening salvo to my next mining stock journal that'll come out tomorrow afternoon. I think, silver's even a more opaque market than gold, right? There's no telling how much silver that goes into China because they don't report the import numbers. And I know they have a massive solar program going on. I was just on the phone with a Zoom video with the CEO of a silver producer over there, and he sells every ounce he can produce over there. And I asked him if that solar program was still going on. He said, yeah, it's huge. They need a lot of silver for it. But it feels to me, and again, I think the nexus of it is London because, right, that's where the physical bars are sourced and trade that go to the east or go to the refiners in Switzerland and then go to China and other Eastern destinations. It feels like there's a scarcity of free title silver bars. When I say free title, bars that haven't been hypothecated, right? Delivered, but kept in the London vaults to multiple parties per bar. And it feels like there's a growing shortage of that. And it feels kind of like the bullion banks are having to scramble to find free title bars that they can ship over to all destinations in the East. And one of the reasons, or one of the things that I think could support my theory is, and I'm sure you've noticed this, historically and typically going into the AM London fix, they push the price of gold down using COMEX contracts. And you always see, so in New York time, the fix is 5 a.m., and you always see this price start diving at 4:30 a.m. Lately, last at least 2 or 3 weeks, I've noticed, not every day, but on most days, the price is shooting up into the AM fix. And that kind of tells me that the banks took on obligations during Asian trading hours that are going to require them to get a hold of bar.
Dave suggests that if silver can surpass $26.50, it could signal a significant upward trend. He explains that the silver market is more opaque than gold, with demand from China, especially for solar panels, being a significant factor. He highlights that while gold has Basel III compliance, allowing for easier physical delivery, silver does not yet have this, which means that those investing in silver are likely demanding physical delivery. leading to a drain in liquidity for the short sellers. Dave notes that the recent movements in silver prices suggest that banks may be struggling to find enough physical silver to cover their obligations, especially with increasing demand from Asian markets.
It was headed towards zero. It was well below $3, and then this guy gets involved, and the stock pops. I'm sure part of it was short covering, but it's actually come off quite a bit since the initial price surge. I don't know what his intent is with this thing, because they're sitting on a lot of commercial real estate that's probably basically worthless, and it's both multifamily and office buildings. They took over. They acquired I think it was a California bank. I think that's where it was based, and that bank has a mortgage servicing business. And my understanding is that's what he's after. So he'll strip out that and just discard the rest, get what he can for the rest. Because mortgage servicing business is I mean, you're at it. It can be risky, but until it gets really risky, it's their cash flow generating machines. And I think that's what he's after. There's actually another bank that's New York based, and they're essentially way underwater. They're way upside down in terms of the value of the commercial real estate that they've lent against versus the amount that they've lent against it. And they've got, it's just incredibly leveraged to commercial office building. Again, office buildings and multifamily. And one of the things that because people usually think, oh, well, multifamily's safe. We got to have, people need to rent, people who can't afford homes. Well, there's a massive amount of multifamily capacity coming onto the market this year, and that's going to drive down rent prices. And it's going to make multifamily debt toxic. And that's one of the things we have ahead of.
Dave highlights the potential for silver to outperform gold in the near future, especially as the gold-to-silver ratio indicates a downward trend. He also mentions specific opportunities in the banking sector, such as New York Community Bank, which faced significant challenges but saw a temporary boost after an investment from a former Treasury Secretary. Dave warns that the bank's underlying issues, such as exposure to risky commercial real estate, could still pose a threat to its long-term viability. Dave discussed various financial topics, including the significance of the 10-year yield, the potential risks in the commercial real estate sector, and the role of central banks in buying physical gold. They express concerns about the interconnectedness of financial markets and the potential consequences of ignoring the underlying issues in commercial real estate and banking.
18 hours a day researching and reading everything I could get my hands on. A lot of what I used to read, a lot of the guys I used to read, I've kind of discarded them, and there's certain guys I pay attention to. You being one of them, of course. But I kind of came to the conclusion that if in fact the Fed is in the predicament that we think that it's in, and obviously there's no way to for sure prove that. I think Germany tested it, and we saw that, right, when they wanted to repatriate, something like 800 tons of gold, and they settled on 300 over 7 years. Yeah. When meanwhile, a couple years earlier, Hugo Chavez down in Venezuela was able to repatriate 200 tons of gold.
Dave emphasizes the importance of monitoring key indicators like the 10-year yield, which has broken out recently, indicating potential risks in the financial system. He warns that even if the Fed were to cut rates, it might not be enough to mitigate the challenges in commercial real estate. He adds that the Fed may have to resort to further quantitative easing key to address the issues in the commercial real estate market, which could drive up the price of gold as investors seek a safe haven. He also discusses the possibility of a new gold-backed currency being introduced by BRICS nations, which could further undermine the dominance of the US dollar. That's all for today. Like, share, and subscribe to our channel for more videos like this.